The Microsoft sell-off story from math to moats. On January 28, 2026, Microsoft reported strong fiscal Q2 earnings, yet the stock plummeted nearly 12% the following day. This wasn't a failure of profit, but a reset of expectations. Investors were spooked by the massive 66% surge in capital expenditure, mostly on AI infrastructure. There was no immediate timeline for a return on that investment, creating a wave of uncertainty. Azure growth cooled slightly to 39%, with management admitting they cannot build data centers fast enough to meet demand. This physical limitation on growth added to the sell-off pressure as demand outstripped infrastructure. Disclosures revealed that nearly 45% of Microsoft's future cloud commitments were tied to OpenAI. This made Microsoft's success feel overly dependent on one partner, shifting the narrative toward risk. Fast forward to today, March 18, the focus has shifted from spending to who owns the relationship. The stock is currently fighting to find a floor around $394 due to a major shift in the competitive landscape. News of a $50 billion deal between Amazon and OpenAI has shattered Microsoft's perceived exclusivity. Microsoft is weighing a massive lawsuit alleging a breach of their original cloud partnership. In response, Microsoft is aggressively restructuring, merging teams to build its own sovereign AI models. They aim to reduce reliance on OpenAI's black box by developing internal technologies. This downturn represents a painful but necessary transition. The market is now punishing risk over cost. To reverse this, Microsoft must successfully launch Copilot 2.0 and settle its legal disputes. If they prove Azure is the home for all AI, the stock is positioned for a major recovery toward its previous highs. Despite the drama, there is a very bright spot in the broader market: the AI diffusion phase. We are seeing record-breaking productivity gains in mid-cap software and industrial sectors. Companies in healthcare and logistics are finally seeing the ROI that investors have been looking for. We are moving into the era of agentic AI, where software actually performs complex tasks. This shift is creating a more resilient, diversified bull market that is no longer solely dependent on tech titans.